Hello everyone, welcome to Acueda Learning Hub. So I hope you did like the previous videos, the entire IPO playlist. Also do like this one, and if you have any doubts you should have listed them in the comment section and I would have already answered them. So going further, now we'll learn classification of the market. In this video then we'll differentiate primary market, secondary market, etc. So let's begin. Now let's classify. There's one market called financial market. In a country I'm talking, okay? In a country in India we have financial market. It has two parts. One is the money market, another one is the capital market. So money market is comparatively simpler. Let me complete it first. It is short-term trade, short-term loans between banks and other institutions. So whenever you approach a bank for a car loan, for a home loan, for a study loan, it's a short-term loan. 20 years in a financial market is a short-term period. It goes for extended 100, 150 years. So 20 years is a short-term period, short-term loan, and it comes under the money market. Next one is our capital market. Now capital market has two parts, securities and other lending and borrowing. So for securities, it's the shares or the share in the company you buy. You are the angel investor or investors. When you buy stocks, you get shares. So this all comes under the security market. Now other lending and borrowing, it can be the financial system concerned with raising capital, dealing in bonds, debentures, etc. So now for the securities, we have again the securities is divided into two. So first it was the financial market, money market, capital market. Money market, short-term loans. Capital market again divided into securities and other lending process. Other lending can be bonds, debentures, etc. Security market is your shares market. Now securities is again divided into two. So financial, money, capital, securities, others, and securities is divided into secondary and new issues market. So secondary market is when you release your IPO for the second time or the multiple times you are releasing your shares, it's under the secondary market. New issues market is your primary market. It's also called new issues. You remember I told you when I described primary. So when you release first time your IPO, it's under the primary market or the new issues market. So let's revise this. Financial market divided into money market, capital market. Capital market once again divided into securities, other lending and borrowing. Then securities is divided into secondary market and new issues market or the primary market. So let me differentiate. These are the two most important ones for you, secondary market and the new issues market or primary market. I'll describe primary and secondary for you in great detail. Right now I'll differentiate point by point with them. So first let's take the definition of primary and secondary markets. Primary markets are the security issued for the first time to the public. Remember our company, the XYZ Toys Limited, was a public entity, a private entity. So now we are listing it for the first time to make it a public entity. So now it will be a public limited company. So the shares are issued, the IPO is issued in the primary market for the very first time. So securities are issued for the very first time in the primary market forever. Now you need to learn this. So the secondary market. Trading is already issued. Trading has already begun in the primary market. Now when it is done the next time or the third time or the fourth time, the securities are listed. It's in the secondary market. Now primary market is also called the new issues market. The secondary market is called post-issue market. New issue means there's a latest issue, it has been issued, IPO initially. Now post-issue market, it has already been issued, it is reissued, so it's the post-issues market. Now third point, which is a major difference, price determination is done by the issuer or the company with consultation of the merchant banker. As we said, we chose our ABC Capital's bank. So the bank and the investor or the IPO or the firm sit together, determine the price. So for the primary market, this is how the price is determined. The bidding takes place, but final decision is always taken by, bidding also takes between a 20% cap, no? So the price is initially determined by the company, the firm and the bank and the merchant banker. So this is how the price is determined in the primary market. But in the secondary market, supply and demand forces of the market determine the price of the issue. So what are the supply and demand forces? Supposedly a share has too much demand today. It will be on a high price. It will be a very high price today. Then next day nobody is demanding, everybody is selling it off. So the price reduces. So this is how demand and supply forces determine the price in the secondary market. Now the intermediaries, which are important contributors. Intermediaries are merchant bankers, lead managers in the primary market. Remember we formed a syndicate. So in the syndicate we had lead managers, the one managing everything, the bank, the head bank. So it was the lead managers, the merchant banker, everybody. These are the intermediaries in the primary market. For the secondary market, you have stockbrokers. One and only thing is stockbrokers. There are sub-brokers sometimes, but now since it's an online age, nobody is trading with sub-brokers. People go directly register themselves with brokers. You know what is brokers of stocks? Grow, your up stocks, everybody is a broker. So you go and register yourself directly with the stockbroker. So this is how the market goes. You have a broker who is the intermediary between you and the stock exchange. Now, primary market's main use and the primary use of the primary market is to seek listing of securities. That security is listed. That's it. Its use is. But the secondary market has more use. It has to trade in securities. Every day the share is sold off, more is gained, more shares are demanded, those existing shares are taken away. So trading, this is called trading, when you day trade or you inter-day trade. So you trade in shares. Now it provides liquidity. Secondary market provides liquidity. You are an investor, you bought a share, now you need money, you sold the share, now you have extra money, you again invested in the shares, you lost money in the shares, it's okay, sometime again you invested. So this is why you are provided liquidity to investors. Yes, and obviously secondary market is also used for raising capital. When you buy shares, the company raises capitals, so it is used for raising capitals too. Both the markets are used for raising capitals. Basically, that's what's the use of a market. So here we go. We are done with the classification of the market, differentiation between primary and secondary market. In the further videos, we'll learn more about how to buy an IPO. When you are as a retail investor buying an IPO, you need a guide. So next video is gonna be a guide for you on how to buy an IPO, how to register your account, how to make an account, how to make the payments. So keep following, do hit the like button, and if you have any doubts regarding the markets, tell me in the comment section, I'll be answering them. Subscribe to our channel, the AccuVeda Learning Hub. Keep following. Thank you.